Hello, Timothy LeGendre here, CPA in Florida. I started a playlist going over my bookkeeping services, different things I provide, things I've seen over the years, playlist series, etc. Spent a lot of time just kind of rambling and talking about QuickBooks and why it sucks, but I actually wanted to lay the foundation and try to make an actual decent video here on what I've seen over the last 5 years and over thousands of sets of books, etc., etc. And it's very similar to like if I was a mechanic and I told you that every time I work on a Nissan Altima, it's the worst car ever built, and the parts are bad, the fixing it's hard, things don't work that right way, don't get a lot of mileage, they have all these problems. I would be inclined to think that maybe you would respect that answer and give that more weight if I had worked on a lot of cars for many years and seen thousands of different vehicles. And I told you, the top reasons why this vehicle was one of the worst ones to buy. I would think that you would give that a bit of weight. So I'm trying to do the same thing on why you suck at QuickBooks. And it's one of those things where it's not you, it's me, and me being QuickBooks. So QuickBooks is it's just bad from the get go. And I think one of the big things that they really sell is that you could just it'll do it for you, and it'll get the job done, and it can do anything, and just buy QuickBooks and you're done, and like that's all you need, and just get QuickBooks and you're good to go, and you can handle all the things yourself and get back to running your business, and all these kind of just make you feel good things, and that's the power of marketing and advertising, and nothing against all that. But as an accounting software, they don't really have a lot of internal controls, so they basically just let you do anything that you want to do inside the books on something that has a very strict and very set way of having to do it that's been around for hundreds of years. I mean, double entry accounting, double entry bookkeeping has been around for hundreds and hundreds of years. So to think that this software is going to, say that you can do the books almost for you, but have no internal controls, no other way to really kind of have guardrails in it, and like will let you do anything in the books without stopping you, then it's really setting you up to fail, because there's no way for you to really know that you're doing something wrong. And there's think about all the different software out there. Just think about basic old Windows or even Microsoft. Their operating system. If you try to delete a file, it's going to ask you like, do you want to delete this? If you try to do something in your registry, it's going to ask you different questions. Like it's going to say like, certain times it might, double check to see if you're the administrator or whatever. Like QuickBooks it doesn't have any of that. It will let you post anything to almost any chart of account. It will let you make negative bank accounts, run negative credit cards, negative loans. I've seen, assets that don't make any sense. I've seen, equity accounts, like it automatically opens up open balance equity, which is not a proper, it's not a proper chart of account. It's not a proper account. And it just does not really know how to really let someone come in and help them actually do bookkeeping. So it also doesn't know what kind of business you are. It's just like kind of just one kind of across this, a board set of books, and not every business has the same chart of accounts. It doesn't understand your structure of your entity, if you're S corp, C corp, nonprofit, Schedule C. It doesn't know your tax structure. It doesn't know if you're a different type of industry. It can have some basic kind of suggestions. Most of the time, like it has a very complicated chart of accounts, way too many accounts on a profit and loss. And then what that usually does is I've seen it kind of spur on this mentality that I have to be super detailed and super anal and super, have a million different chart of accounts for office paper and office ink and office, printer and office software and office utilities and office staff and office payroll. And it's like, no, like that's not like, we're not going to do a tax return like that. You're not going to want to do that. And that's not going to really help you run your business. I mean, maybe. But if you're running your business if you're buying too much office paper, then like maybe you have some different issues inside, your staffing than you do in terms of like a bookkeeping problem. So I just wanted to kind of, set the groundwork on a lot of things that I've seen over the years. Why, if you're going to do your own books, I strongly suggest not getting QuickBooks. And, I would strongly suggest hiring me, first of all, but in the sense of like telling you that you have a problem and I'm the only person to sell you a cure, like that's not what I'm trying to do. there's other softwares out there. There's Puzzle.io, there's Kick.co, there's Zero. There's a lot of different ones that are trying to come along and say they got AI. You don't need AI. You don't need AI to do books. There's a lot of bank accounts now, and some of them I really love, like Mercury, Relay, Bluevine, that will let you do a lot of categories and matching and stuff inside your own books, like right there in the bank statements. And that stuff is really, helpful, really important. You can run all the types of filters. Like, there's ways now for you to have kind of proper reporting, insight to what's going on inside your bank accounts, which is really important, because at the end of the day, what really matters to your business is cash and cash flow. Even if you're running accrual, you're going to end up looking at the cash flow statement and see the reconciliation to cash, because cash is the most important thing. So, there's tools in there now to be able to really, drill down on, I do it myself. I have Mercury, and I drill down on my bank account to see, why am I off by 1 penny in my own reconciliation? And, I don't do QuickBooks. I built my own accounting software. But at the end of the day, to stay, up to speed, to stay true to double entry bookkeeping, I actually do all my own personal books by hand. So I will manually reconcile every single thing that happens in my own business by hand and do it manually, because I want to stay rooted in proper accounting and stay rooted in proper double entry and not get lost in that. Because what happens a lot of times is, if you're doing it yourself and you realize that you don't have the time for it, or it's wrong, or it's not serving you, you end up hiring someone that calls themselves a bookkeeper, but all they know is one piece of software, and that's QuickBooks, and they don't know accounting. And I've just seen it time and time again. I've seen people get paid high amounts to be able to just run somebody's QuickBooks, and they don't know accounting, they don't know basic things, they don't know tax. And you would think, well, hey, I'm doing it myself. I'm saving all this money. I'm just paying $75 a month for QuickBooks. And you think you might be saving money, but in the end, it's actually silently costing you thousands of dollars. And this isn't some kind of, advertising video. This is just true, because I've seen it. I used to work for a boutique tax firm, and I'd sit down with the head CPA and the founding partner, and we'd go over tax returns. And here's how the conversation would go. Well, how long did you spend on this? Okay, why'd you spend so much time? Well, I had to, fix their QuickBooks. It was out of balance. It didn't match. It didn't match the tax return. They didn't go back and make any adjustments from last year's tax return. They had negative, bank accounts that said they owed, Chase $20,000. Their loans weren't on there. Their car loans weren't on there. They bought some trucks. They didn't put those on there. Nothing was on QuickBooks. All their personal expenses were on there. They expensed their entire truck payment as, principal interest altogether. Like, their books are just a mess. Okay, well then throw an extra couple $100 to $1,000 onto their tax return because of all that extra work you had to do. And it's like, okay, well there's a couple thousand, there's $1,000 right there that you silently lost. And then a lot of times in just trying to fix it for a tax return, because I'm in the midst of 400 other tax returns that I have to file, which is how a lot of these tax firms operate. Then you're not getting someone to actually look at all the deductions and the tax strategy and the tax planning, because your books are a mess anyway. So the amount of time that it would take to just get them up to speed is more than time than you're really allowed to even do on a tax return. So there's a couple $1,000s you're probably missing too. And then, okay, well then you finally hire someone thinking that you're going to get it right, and they don't really know accounting. So they've got transfers, all this, that, and the other. They've got one business on here, one business on there, and they're mixed up. They got their personal life still in there. They have a whole bunch of different things that they just posted to miscellaneous. Well, I'm never going to do a tax return with miscellaneous, right? So I'm not going to tell the IRS that you just got miscellaneous expenses. what? I just that sticks out like a sore thumb. So, it really is true that if you're trying to do your own books and you're using QuickBooks, or you hire one of these bookkeepers, you're really costing yourself a lot of money. You really are. There's no really way around it. There are, that 1 out of 100 that has pretty good books. But what I've seen is that they're working for accounting firms, and they know accounting, and they've studied accounting. Maybe they have a BS or MS in accounting, and, I feel bad for them, but they've, somehow just ended up doing people's QuickBooks as part of working for an accounting firm. So, and even then, we all still make mistakes. So I've built a software that does a lot of things that are automatic, and tries to look for things within a penny or within a certain day to match things up. So like all my credit card payments are automatically matched up and sitting there waiting for me to review. And then I go line for line for yep. All transfers are matched up. So all accounts are accounted for, and then personal accounts I will code in so that then those are then set aside. So then I have a list to go back over reimbursements. There's something for you. What if you had reimbursements that you paid yourself money out of your business because you happen to be at Costco and you needed to buy something for your business and you didn't have your business credit card on you or whatever, so you bought it out of your personal account? That's okay. It's called a accountable plan. Different things that an S corporation could have. But if you don't have clean books and you don't have someone that is going to look out for that for you or know about that, and you just got this bookkeeper, or you just throwing your crappy set of books at a tax guy, hoping that he's going to figure it out for you when he's not really getting paid to do that, and he's got another 1,000 returns on his desk, then you're losing out on that too. So, and there's just so many different examples like that. So, and a couple things that also QuickBooks is really bad at: home office, mileage, assets of depreciation, loans, splitting principal and interest. I've built a loan reconciliation program that will, if I have the data, 7% interest rate, 36 months, if I have like the terms of the loan or the line of credit, et cetera, then I will calculate and try to post it that way. If not, then I look at, typical loans just that I've seen over the years and come up with like a general rule of thumb. So for instance, like sometimes like around the beef of a auto loan, it might be like 80-20 ish. 80% is going to principal, 20% is going to interest towards kind of like the middle to back half. Like as you go through, like of course more is going to be posted to principal. So what I do is I will try to kind of essentially guesstimate, and then each month when I get the balance, I reconcile to that balance, and then it automatically will then adjust the interest because it already has a entry in the general ledger for it. So it just goes, makes an adjustment, says, nope, actually it was $158.55 instead of $153, and it just makes that small adjustment automatically, and I reconcile all my loans that way. And I'm getting that data in through Plaid. I'm not sitting there manually looking at some kind of statement from the bank. That's one thing that I've built into my own workflow and my own software. And it's just the bottom line is that QuickBooks is just, it's, if it was a contractor and you wanted to build your dream home and QuickBooks comes along and it's basically saying like, here you go, here's a screwdriver and a hammer. You can build any house you want. You can do it yourself. Here you go, buy this. It's going to work for you. You're empowered to build your own house. And then you show up to the job site and you got a hammer and a screwdriver. And that's not going to build a house. And QuickBooks is not going to do proper accounting unless you have all the other things. So what I've also seen it do over the years is try to, instead of make the software better, it's allowed you to basically kind of Frankenstein, put it together some kind of accounting system by hooking up 15 different, all these different integrations and all these different things that will then try to post on top of your bank statements and try to put in all these other entries and journal entries. And I've seen them; they're wacky. I've seen all kinds of crazy stuff in there. I've seen them try to do sales tax. Some of them are okay. I've seen things like Avalara do it okay. I've seen certain software kind of hook up to QuickBooks okay. But typically what happens is it ends up sending a lot of information that sits on top of your bank statements, and then the reconciliations are always off because trying to manually match up what has been posted to a system, also what's automatically been posted to the system through some kind of integration, and then what's actually happened in the bank statements, then usually I've seen it to where like either they've never been reconciled at all at the history of QuickBooks, back until when it was started, like whenever someone bought QuickBooks or started QuickBooks, or for several years, or they were done. And then I've even had clients, argue with me that, well, I did the reconciliation. It's done. I've done it. It's already good. Like I've already done it. And it's like, okay, well, it says your, Chase bank account has $1,800 in it, but you gave me a statement from Chase for that bank account that said that you had $3,500 in there. If you reconciled it, why wouldn't it match? Well, I don't know. I'll ask ChatGPT. It's like, okay. And then I've heard it to where, the people that have the extra $100 or so a month for the live experts or whatever at QuickBooks, and they tell them, well, just go, go post some fake invoices, and it's just like, well, no, like that's not proper books and records. So anyway, not another whole video bashing on QuickBooks, but just trying to set the foundation for this, kind of bookkeeping series, and kind of, letting you into things that I've seen over the years, kind of like as a mechanic, as someone that's been doing it, like QuickBooks is not the answer for you. And, the answer is for me to do your accounting for you on my own books. But even if you don't hire me and you don't like me, that's fine. But to be honest, you're better off doing it, on a piece of paper or in Excel and a spreadsheet. Because, for instance, I've had a client that used to run his books in spreadsheets. He'd give it to me each year, and the tax return would be done. It would be pretty good, mostly accounted for. The major things would be there, seemed clean, and decided that it took too long to do the Excel file each year, so he's going to do QuickBooks because it's going to save him all this time. Well, then brings me QuickBooks. Every chart of account is wrong. Bank account is negative. Has a loan on there that's negative. It's like, dude, do you really have a negative $200,000 mortgage? What about your building that you bought? Like, it's not even on here. And then you have all these expenses on here that aren't even, like, I've seen your spreadsheets. Like, where's the true picture here? Like, you're showing this huge amount of income when I know over doing your financials and your tax returns for several years, like, you don't show this much income. What's the matter? Oh, well, I don't know. I'll have to go in there and fix it. Comes back 3 weeks later, one thing has changed. Wasted 3 weeks doing it. So at the end of the day, was facing, $20,000 extra in tax because his books were a mess. Wasted several weeks trying to fix it, didn't fix it, and then end up having to pay to fix the QuickBooks to get it to the point where it could possibly do a tax, then had to pay more. It's just like, don't do it. Just find a different way. Find a different software. Find something else. I'm telling you right now that you cannot just buy QuickBooks and do your own bookkeeping. It's not going to save you time. It's not going to save you money. I'm just telling you that now. I've seen it for years and years and years. I've seen it for thousands of clients. It's just not the answer. And I wish I had what is the answer, but I don't. I just know that don't drive this car. So anyway, not trying to make hour-long videos here, rambling about random stuff. I'm just trying to, share what I know and share years and years of learning. At the end of the day, if you want someone to do your books right, that is a CPA that has done 20,000 hours or more in financial statements, that knows tax, that knows how to properly run a chart of accounts, then send me an email, tim@timcpa.com. Visit my website, timcpa.com. There's a pricing calculator on there. You can get a free quote. No newsletter, no signups, no spam, no whatever. Just you can see what it might cost you. And then I do typically reach out to follow up, of course, and see if we're the right fit. I'm not the right fit for everybody, but I do help a lot of people and get their financials on track. And then once you have the proper books and records and proper financials, you actually be surprised that you end up making more money in your business because you're focused on the things that actually make you money. You're not worrying about the financials. You're able to have clean books and records for a tax return at any time. If you ever go to try to get a mortgage or a house or a credit line or something like that, like you have financial statements to give them. So, and it frees up a lot of mental time and stress, and you end up making more money in your business. I've seen it across the board, time and time again. They give it up, they quit QuickBooks, they stop doing it, and they make more money in their business, and they have a lot, things to build off of there, like dashboards and KPIs and metrics and things that I'll go in another video. So again, thank you for listening to another long video of me talking about one specific thing, QuickBooks. But I'm going to continue the series talking about a lot of different things. So stick with me. I appreciate it. Have a good one.